It is time to check in with Amanda Lang, CTV News Chief Financial Correspondent, and talk about some of the big business stories of the week. So let's start at home. First of all, there's a couple. There are a couple of things here politically, but I'm not sure how they affect anything as far as business goes. First of all, on the Danielle Smith announcement yesterday, a potential referendum in Alberta, we have any kind of financial or business issues to talk about as that might relate to that announcement?
I mean, where that starts to get serious, Aaron, is if people take it seriously. So we're just in the process of making Canada a destination for investment again. We're saying our energy sector is open for business. We're serious about getting our resources to market. We're going to develop. A lot of that capital and expertise is in Alberta. So if global markets say, what is going on here, they might hesitate. This is a bad time for this kind of conversation. Having said that, I don't know how seriously anybody takes it because the logistics of it are very complicated. It's hard to see a path to it. So you can kind of say, stop rattling the cage, guys, at a time when we're trying to get things done. But, people are allowed to have a view. And I guess the line that the premier there is trying to walk is letting them have their day while also professing to believe in the Federation. Yeah. So it's an interesting line.
And it is walking a line, isn't it? It's very strange. I think I've not heard anybody react to the kind of announcement she made positively yet.
Yeah, I mean, I think a lot of people, there are those who have great grievances inside the province of Alberta who want to separate. I think they're few in number. And I think there are a lot of people in the province, there are tons of us outside of the province, who would welcome a Canadian premier saying, I believe in a strong Federation of Canada and I believe in provincial rights, but we're not going to separate. And she's not saying that. And I think that might come back to haunt her, to be honest, Aaron.
And by the way, for people,
part of her party.
Yeah. I was going to say, you're an Albertan by birth.
No, I'm not.
It was a good shot.
Yeah, I'm the family Saskatchewan, grew up in Winnipeg. But
okay.
I get Western alienation. I do. I grew up with it. I hated Toronto until I moved there. So I certainly understand it. And, it's one of the complexities of our country. But we got to move on. We've got too many important things to do. So there is a business story here. It does matter. And this kind of thing is a distraction.
So let's talk about what you just brought up with respect to natural resources. We've heard the Prime Minister speak on this many, many times. Big announcement. He was actually there to break ground on the largest graphite mine, not just here, but in all of the G7. So clearly something positive, and along with what the Prime Minister's been talking about.
Yeah, this mine in Quebec is important. It's graphite used in electric vehicle batteries, so it's a hugely important part of the critical resources supply chain. We want to play a role in that, and one of the things Canada can do, even if the U.S. says, look, we don't want to make cars in Canada anymore, we can actually own part of the supply chain because they can't just conjure up this stuff. We have it in our ground. So it's super smart to move ahead, move fast. How quickly do we get from breaking ground to actually producing graphite is a good question, but obviously it's a super important step in the right direction.
Yeah, it's interesting. This story comes out at the same time, and I don't know if you've seen it. There was a report from the Montreal Economic Institute this week talking about the fact that given what we're going through right now, it would be a good idea to bring up this idea of, again, considering getting our own natural gas, at least here in Quebec. And they laid out the figures. They estimate if we were to do this deal and actually tap into our own resources in our province, it represents $93 billion over the next 25 years and over 230,000 jobs to be created and high-paying jobs to boot. So I don't know if this spurs the federal government on. Again, it's Quebec, so Quebec's going to have to make that decision on its own. But I just find this whole idea that we're finally doing what we said, or at least talking about what we said we would do if times got tough, and times are tough now.
Yeah, it's interesting. I mean, you can look at that two ways. We should be thinking east-west, right? East-west pipeline, east-west electricity grid. Our hydro shouldn't all go north-south. But you can also say there's an opportunity cost. Do we spend $93 billion building something we don't need? If we have an okay relationship with the U.S., the system we have right now works generally. And let's instead invest that in all this new critical resources, these new minerals that are part of the next generation of technologies. It's an open question. We live in a world now where maybe we can't rely on our biggest trading partners, so this is a reality. My hope is that we get to a point where we allow our existing infrastructure to be and actually invest in infrastructure that's for the future.
Okay, so it's funny because, the argument in Quebec has been for the longest time, no, we're not interested. Public opinion has been on the environmental side. That has begun to change. The last survey here back in December had a majority now saying, yes, given what we're going through, given an unstable neighbor to the south, we're interested in looking at this again. So
That's good news, right? And hopefully we get movement. That's the kind of interprovincial connectivity we need to be looking for. We need it in the grid. We need it with our resources, our pipelines. I think there's some value in that, but I'll go back to there's opportunity cost. If we spend there, we're not spending somewhere else.
Okay.
Let's get it right.
Let me move on to some actual business news. Annual inflation rate coming out for the month of April at 2.8%. Again, much of this reflected just in the price of oil.
Yeah, if you strip out oil and then groceries still running hot, but not as hot as last month. That's good news. We had inflation at 2.1%. We do all, of course, eat and buy fuel. So it does matter that headline number is still pushing up towards 3%. But my guess is this gives the bank some comfort. If we can get resolution in the Gulf, if we can get oil prices to settle down, inflation so far doesn't seem to be taking hold, which is really good news.
So I want to go back, if I can, to a bigger picture item. We talk about obviously what's happening here, but the story, at least from what I'm seeing in the U.S. stock market, for example, which has been sort of, I guess, taken over, if you will, by the hyperscalers like the NVIDIAs and everybody else. But then there was a story this week, and maybe you can explain this to our audience. The 30-year Treasury yield in the U.S. hit over 5%, 5.03%. People look at that and say, you know what, we're heading to, and I know this has been talked about for a while, a crash, call it whatever you will. The last time this happened was, when back in 1999, and we all know what happened then with all the tech stocks. What do you see when you look at this number, and how concerned should we be?
I mean, it's concerning because the bond markets tell a story about what the market is worried about, right? So the market is worried about inflation taking hold. The market is worried about the fiscal situation of governments, and so then they demand more for that long-term risk of holding your bonds. The U.S. is still a safe place. I'll tell you the story I've been watching is Japanese bonds, which are, at the last time I looked at their 30 years, are above 4%, which if you've been following Japan even loosely, that's incredible. They had 0% bonds for a long time. So the world is saying we don't really. You need to pay us to hold your money because inflation is going to eat away at it. And maybe there's a risk, I'm adding this thought, but maybe there's a risk that governments have to borrow more and more and more, that they're not actually fiscally prudent. So it's a signal. And the question is, of course, it's not a signal of economic strength. It's a signal of concern. So the question is, what happens in this world when investors don't trust the U.S. as much as they once did? It's still the safest of kind of all the markets, but it's, to me, it's a sign of risk out there. And by the way, we're also seeing people very worried about stocks, even as they hit new records here in the TSX this week. The question is, are we getting ahead of ourselves? Are the valuations too high? Are we due for a pullback? And that has some people on the edge. Yeah,
and of course, the only other part of that, I guess, and maybe you could just comment on that, when the 30-year bond is now over 5%, the other things that follow include mortgage rates, car loans. I mean, everything becomes more expensive, and that drives inflation.
You're absolutely right to note that the 5 years are what generally we price our mortgages off, and the banks can only control the front end of that so-called yield curve. If the market is asking for more, we will all pay more. So that does become a little bit, it's sort of irrelevant what the bank does if your market is pushing up the other end of the yield curve, for sure. So debt will get more expensive. So it's time for all of us, governments and individuals, to keep it in mind that prudence is actually the name of the game right now.
We leave it at that, Amanda. Thanks so much. Always appreciate it.
Great to talk.
This May, iHeartRadio celebrates Asian Heritage Month. Discover powerful stories, vibrant cultures, and unforgettable music. From inspiring podcasts to playlists that span East, South, Southeast, and West Asian artists. We're honoring the voices shaping our world. Listen now on the free iHeartRadio app and at iHeartRadio.ca.